Hello, everyone. Hey, this is awesome. I get to come to you a couple of times within a couple days. But there's a lot going on, so things we need to be aware of, and then things we may be able to take advantage of. Today is Thursday, the 24th of February, and essentially the day that Russia did invade the Ukraine, and the NASDAQ was actually up 3.5% today, a huge up day in the stock market. So, sometimes that bit, even if it's a bad thing that happens, now there's some certainty around it, and the stock market can react positively, which is, I know, weird. But tomorrow could be right back down again. It's going to be a lot of up and down for a while. Now, we want to take advantage of these times when it's down with certain things we can be doing. So I wanted to spell those out for today. Number one is probably Roth conversions. If you've been working with your advisor or your client service specialist, then if you have a plan to do some Roth conversions this year, well, this may actually be a good time because we can convert stocks or funds that are down in an IRA. So let's say maybe, for example, an IRA had $100,000 in it when the market hit its high. Now maybe it's down to 80,000. Well, if you were going to convert 100,000 this year, well, now you can actually convert the IRA, but you're only going to be paying taxes on 80,000 for that conversion, and then it gets converted over into a Roth IRA. And the Roth IRA now is growing tax-free, and you're going to be able to take the money out tax-free after 5 years. Now, if you already had a Roth that had the 5 years on it, then that time period is gone. If you're under 59 and a half, there's other issues with penalties and things, but otherwise, Roth conversion may be an excellent time for it. And if you're thinking about it or you had a plan to do it this year, now might be the right time to do it while those stocks are down. And contact your advisor or your client service specialist to visit about that to see if you want to make that happen now. So remember that one. Number two, cash needs. If you're needing money for current expenses or just to fund yourself in retirement, not to fund yourself. It's not all about having fun, but fund getting money to fund your day-to-day expenses. So if you're doing that and you've run out of cash, now in our planning, we try not to let that happen because we're trying to foresee that, sell stocks when they're higher, get the cash in place for the next 3, 6, 12 months. But if we've hit a period where now you're just out of cash or you're really low, you want to resupply it, then you may not want to sell the stocks that are down. So if you have annuities, then this is a good time to dip over into the annuities. As long as you've had it for a year, you can take out up to 10% with no penalties. So if you need some cash, now that takes a couple weeks, takes a little bit of paperwork, need to sign something. So if you're needing cash, get busy getting that done and just call your client service specialist. They'll chat with your advisor and we'll get that process started. If you have an income rider on your annuity and we're kind of counting on income down the road, then if you take money out, it could affect that income. So on that case, make sure you talk to your advisor. We do have some income annuities that it may be just fine, or it was even built into the plan to take some cash out if needed. So, all right, that's a little bit about the cash. And then let's talk about funding of IRAs and Roth IRAs. Just looking at my notes here to make sure I cover everything. But, if you're over 50, you can put $7,000 into an IRA or $7,000 into a Roth IRA, or half of that into the Roth and half of that into an IRA. If you've earned at least $7,000 in earned income. And if you haven't earned too much You know, if you're filing joint and you're getting up over maybe around 125,000 in adjustable gross income, then you may not be able to actually put money into an IRA. But then all the way up to about 205,000 in income, you can put money into a Roth IRA. And if you have cash to be able to fund either one of those now is a great time to get them funded. You actually, for the year of 2021, you only have until April 15th to do that anyway, but now would be a great time. Take the cash, get it in there, buy equities while they're down. Great time to buy them. So if you're thinking about funding a traditional or a Roth IRA for yourself and or your spouse or both of you, so that would be 14,000 if you could do it for each of you, and that could be for 2021. And if you can actually do it also for 2022, you can do that now. So that could be 28,000, 14 plus 14. And if you have that money sitting in cash, get it into those IRAs and buy stuff now. Great time for it. Okay, if you don't have the cash and you still want to do the IRAs, you can shift money out of a brokerage account that you have over into the Roth or the traditional IRA and get that money either giving you tax deductions or tax-free benefits. Okay, so if you're going to do that, get that money in there, let your client service specialist know that, and then they'll chat with your advisor, or you can also try to get in touch with your advisor to just have any discussion about that. But great time to do it if you're going to do it. And that was my message for you all today. Think about those three things, and if something there is going to be advantageous for you, let's get it done and actually take advantage of this dip in the market. All right, that's it for me. We'll look forward to next time. Bye.